As we navigate the evolving financial landscape in 2025, it's crucial to understand how recent shifts in economic and fiscal policies under the Trump administration are reshaping personal finance. From tax changes to evolving investment strategies, the following financial planning tips can help ensure that you make the most of your finances in this new environment. 1. Maximize tax benefits from recent tax cuts. One of the key aspects of Trump's policies is the continuation of tax cuts, especially the reduction of corporate and income taxes. In 2025, it's important to understand how these cuts can work in your favor. Consider adjusting your withholding, contributing more to tax-advantaged accounts like IRAs and 401ks, and exploring other tax-saving strategies. 2. Focus on retirement planning with higher contribution limits. Thanks to the increased tax breaks for individuals and businesses, now is a great time to focus on growing your retirement savings. With potentially higher contribution limits for retirement accounts under the new policies, take full advantage of these limits to maximize your future financial security. 3. Diversify investments for inflation protection. As inflation continues to be a concern, diversifying your investment portfolio to include assets that historically perform well during inflationary periods, such as real estate, commodities, and certain stocks, can help preserve your wealth. Trump's policies often favor domestic production in industries like energy, so these sectors may provide unique investment opportunities. 4. Take advantage of business tax cuts. For small business owners, Trump's tax policies provide favorable conditions for growth. The corporate tax rate cut makes it more affordable to reinvest in your business. Consider expanding operations, investing in new technologies, or hiring additional employees, which can help you grow your income and take advantage of favorable tax treatment. 5. Prepare for changes in healthcare costs. Under the Trump administration, there have been ongoing debates about the future of healthcare, particularly with efforts to reduce federal spending on healthcare programs. It's vital to budget for potential increases in healthcare costs and consider health savings accounts, HSAs, for future medical expenses. 6. Embrace technology for financial efficiency. With more emphasis on reducing government spending and increasing economic efficiency, individuals can benefit from utilizing technology to streamline financial tasks. Leverage budgeting apps, online tax software, and investment platforms to keep your financial life organized and cost-effective. 7. Consider estate planning adjustments. Given the tax policies, particularly those around estate taxes, it's important to review your estate planning strategy. With potential changes in the estate tax exemption and tax cuts, now may be a good time to set up trusts, review your will, and ensure that your assets are protected for future generations. 8. Plan for the impact of increased defense spending. While increased defense spending may not directly affect your personal finances, it could have a broader economic impact. Economic shifts can influence job markets, interest rates, and inflation. Stay informed about these developments and adjust your financial plans accordingly. 9. Stay informed about regulatory changes in financial markets. Changes in financial regulations under Trump's administration, such as those affecting Wall Street and investment management, can impact your portfolio. Stay updated on any new regulations or shifts in financial market policies, especially those affecting retirement accounts, stock trading, and financial products. 10. Build emergency savings for potential market volatility. Given the ongoing volatility in the global economy and potential changes in fiscal policies, having a solid emergency savings fund is essential. Aiming for 3 to 6 months of living expenses in easily accessible accounts will provide security during times of uncertainty, especially if there are unforeseen economic shifts or market corrections. The financial landscape in 2025 reflects a series of changes in tax, regulation, and fiscal policy. With continued tax cuts, changes in healthcare, and defense spending increases, the financial strategies of the past may need to evolve. By staying informed and making the most of tax advantages, retirement plans, and investment opportunities, you can successfully navigate this new era of financial planning.